Hello, hello everyone. How are you all? I'm Dr. Labi from Dr. Labi's Academy. This is with reference to CFA Level 1 accounting part, and today we are going to have a session on earning per share and diluted earning per share. And okay, yes. Usually, what happens? Can I start?
Yeah, sure.
Usually, what happens? How we are going to process is that see the thing. The we will want to know what is the performance of the company over a period of time. Okay, and most importantly, shareholders. Okay,
Yeah.
shareholders wants to know how much in terms of what, in terms of performance. See, when we are preparing the financial statements, is that when we are preparing the financial statements, we prepare financial statements for three different purposes. There are three different statements are there. The first one is the income statement. The second one is the statement of financial position. Is it? The second one is the statement of financial position, and the third one is statement of cash flows. Why we prepare income statement?
Well, sales, the cost of goods
Now, what is the
sold.
ultimate purpose? What is the
You get
ultimate?
the net profit.
Okay, and see, oh fine. We prepare the income statement to know what? To know the
Components. Okay.
okay. We know the next. Why we prepare statement of financial position?
To know the, yeah, to know the financial position of the company.
To know the position of the company. Okay, and we prepare cash flow statement for what?
To know, to separate the investing, operating, and
To know
financing.
what is the prospects. Is
Yes.
it right? To know what is the prospect. We prepare financial income statement to know what happened in the past and to prepare what the financial position, what happening during present, and we will prepare cash flow statement, what will be happen in the
Future.
future. Okay, these called as 3Ps. Is that three? These called as you have in marketing 7 Ps, 4 Ps. Okay, in the accounting also you have 3 Ps: the performance, the position, and the prospects. We want to know the performance. Performance can be evaluated in different aspects. Is that in different aspects, and one of the key aspect is in terms of how we have to approach with respect to income statement. Okay, how we are going to approach with the income statement. When the income statement, what is it? What is the stake of the shareholders? The stake of the shareholders is the residual interest. Is it? The stake of the equity shareholders. Make it very, very clear. Is it the stake of equity stakeholders is what? It is the residual interest. When we are saying it is the residual interest, you will have the sales, you have all the expenses, you will have profit before interest and tax, you have interest, you have profit before tax, you will have tax. See the things how there is a flow, is it? You have profit after tax, then you will say this is the point. Okay, this all belong, this is the residual interest, profit after tax, that is left over all the thing. Once we have done profit after tax, then there will be what? There are different levels will be there. different levels will be there. How the different levels will constitute? Different levels will constitute. Different levels will be constituted. Is it? Different levels will be constituted with respect to the type of shareholders. Is it right? The type
Yes.
of shareholders. It is in few companies it is there, but this is one of the things. You have preference shares, is it? You will have preference shares and you have equity shares. Is it? Preference shares have the preference over dividends. Okay, means they will have fixed dividends. Is it? Assume that they will make it very clear. Preference shares are 10%. Is it a 10% preference shares? Okay, 10% preference shares. When they say 10% preference shares, they will get dividends of how much? 10% only. Whereas in terms of equity share, it is nothing like that. They will say 50,000 equity shares. Is it 50,000 equity? There's nothing like that. There's no percentage of determination. If that is the case, they will get. They will have. We have to classify. We have to classify between the preference shares and. Now what happens after profit after taxes? You will have first. You have to pay what? Preference dividends. Then you will have. Then you will have to pay what? Equity dividends. In the end, the result is it will be what? It will be retained earnings. Is it? It will be retained earnings. What we are doing is we will calculate. We assume that there are no preference shares. Is it? If no preference shares, is it right? If no
Yes.
preference shares, then we will stop at here. Is it right? What we will do, we want to know how much the firm is performing. Performance in terms of earnings. Is it? Performance in terms of earnings. Earnings, total earnings, we will not only interested in total earnings, but also we are interested in earning per equity share. Is it? Earnings per equity share. The earnings per equity share is nothing but you have profit after taxes divided by number of shares. Assuming that, make it a point, assuming that we don't have
No preference shares.
preference shares. Okay, that's the simple one. Okay, that is the simple one. That's what we are going to do. This is otherwise called as a EPS. You will say profit after taxes, you will say net income divided by N. You will use as many formulas as possible. Is it right? You use as many. This is the simplest one, is it? Now we are going to have, see, it's not only that you will have only forever there will be structure will be same, okay? The structure will be same. You will have different financial instruments. We use the word financial instruments. What are the financial instruments? This is also, it is not required, but in future it is required. IFRS 9. Is it? What are the financial you will have? You will have equity shares. Is it right? You will have equity shares. You have preference shares. Is it? Preference shares. Is it? You have bonds will be there. Is it? You have bond. You will have bonds will be there. Equity shares fine. Equity shares we don't have any further classification. In the preference shares you will have so many classification. One of the classification is you will want to know whether it is convertible or it is non-convertible.
Okay.
Is it?
So,
Yes, tell me
Yeah.
please.
So convertible, non-convertible applies for preference shares.
Yes.
It doesn't apply for equity share.
No. We are
Okay.
converting, see, we are converting the convertible means convertible to whom? Convertible to equity shares. Is that convertible to what? Convertible to equity shares. See what you are saying? They will give you an option for you. Okay, you assume you have taken you have not taken equity shares. You have taken preference shares. When you bought a preference shares, they will make it very clear in the beginning. 10%, 5 years, preference shares. Is it right? They will make it
Yes.
very clear whether it is convertible or it is non-convertible.
Yes.
If it is convertible, convertible to where? Convertible to only to equity shares. Okay? Non-convertible means they will pay you back your principal as well as the dividends. Okay? At the end of the convertible means it will be convertible to what? It will be convertible to
Equity.
equity shares. What will happen? The moment you are converting, assume that how many shares are there with you? How many shares are there? 50,000 shares. If it is convertible, okay, automatically what will happen? The equity shares, the equity shares will increase. When it will increase? When there is a convertible. Assume convertible is 1 for 1, okay? 1 share for 1. How many shares are there? Preference shares. Preference shares are 5,000. Now what will happen? Is it after 5 years? Okay, after 5 years. How many equity shares are how much? 5,000. Preference shares will be how much? Convertible preference shares are 5,000. The total number of equity shares will be how much? 55,000. Now equity shares are convertible. This will get cancelled. These shares are going to get cancelled and number of equity shares will increase. Is that number of equity shares will increase? Is that number
Yes.
of equity shares will increase? Slowly and steadily think how there is a flow. First I will explain you this and then I will come to the notes. You will understand just by reading. Okay? You will,
So
yeah.
yeah. The number of equity shares 55,000 after 5 years, right?
After conversion.
After conversion. So
Whether
okay,
5 years or 7 years, fine, okay. But after conversion,
okay. After
okay.
conversion.
Now,
Okay.
now you see the things. You see that in the beginning, assume everything I am taking. How much is there? Assume the profit after taxes. Is it right? Assume the profit after taxes is going to be how much? Assume the profit after taxes is 25,000. Okay? Profit after taxes is 25,000. Profit after taxes is 25,000. You have to calculate EPS. EPS before conversion. This is original EPS. Okay? What is the formula what is the formula we are using? 25,000 divided by 50,000. How much it will
Okay.
come?
0.5.
0.5.
5.
Now, EPS after conversion. How many? Profits will never change, okay? Assume profits are same, okay?
Okay.
Assume profits are same, but number of shares will be how much?
55,000.
It comes to how much?
0.48. I will check. 0.45.
0.45. Earning per share is increasing or decreasing?
Decreasing.
Decreasing. If the earning per share, see the thing. What is the describe how we calculate earning per share is calculated. Okay, this earning per share is called as which earning per share? The first one is the basic earning per share. Is it right? The first one is the basic. Then this one is the diluted earning per share.
No.
That's all. Nothing is there. Are you clear about this?
Yes.
No. Fine. In the same case, assume in the same case, in the similar way, you will have bonds also. Is it right? Assume we don't have preference shares. In place of preference shares, you have convertible bonds.
Oh. Is it? It's not either or, right? You can have both. You can
You
have
can have
preference.
both. You can have one. Every combination is possible.
Oh.
Every combination is right. You mean in some cases you will not have it also.
Yes.
Okay, there's no hard and fast rule that it has to be like this. Okay, there's no hard and fast rule that it has to be like this. In some cases, you will not have. See, depending on the situation, depending on the information which has been given, according to that we have to act.
Oh.
The response will be as per the information. Don't go with any predetermined mind. You have to analyze, you have to understand the situation, and if there is preference shares, fine. If it's not preference shares, fine. If it's convertible shares, fine. Is it according to the question we have to work it out. There will be all options that is open to us.
Clear.
Is it? You will have the similar in case of bond. Sometimes you will have convertible preference shares. Sometimes you will have convertible preference bonds also.
Yes. Clear.
Is it right? No. That is what is it. Are you clear about this? What is the
Yes.
weight is the basic earning per share? Is it? What is the basic earning per share and what is the diluted earning per share? There are various. See, there are few options are there. There's nothing like you should have any doubt on this. Okay, the options are very few. Is it? The options are very few. What happens in some cases? In some cases, there is one fact is there. We call it as a stock split. You heard about this?
Yes.
What is that?
So you want to add the number of shares, so you do, for example, a 2-for-1 stock split where the numbers of shares is doubled, but the value of each share is divided by 2.
Either it will be divided by 2 or it will be divided by any way. Okay?
Yes.
Is it?
Yes.
Is it?
Yes.
What happened? What happened? See, if you take 10 years back, is it right? The value of the share is going to be how much? Is it right? The value of the share is how much? Around 100. Okay. Now they have divided the stock under they split the stock. See, when they are splitting the stock, there are various reasons. One of the reasons is, see, if you put the value at a higher end, people will find it difficult to buy. It is like the currency. Is it? It is like the currency. If you are putting the value of the currency in small denominations, definitely what will happen? The liquidity will increase. Now what they have done, they have divided the stock into how much? They have divided the stock into 100 baza each. Is it right? They have divided the stock into 100 baza each. Means when you have 100 baza each all over the country. Okay, then when they have divided it, definitely what will happen? The liquidity will increase, the transactions will increase. Definitely people have more. They will find as simple as that. You take the example of currency note denomination. If you put only one RO as in the market, what will happen? People might find it very difficult to transact the things. This is the reason stock split is nothing but dividing the stock under smaller segments. Whether it will be by 2 or whether it will be by 5, whether it will be by 10, again as per the situation. When there is a stock split, is it right? When there is a stock split, what will happen? The N is nothing but number of equity shares. Okay? N is nothing but number of. What will happen? The number of equity shares will
increase.
The number of equity shares will increase, whereas the profit after taxes will remain
Same.
same. When the number of equity shares increases and profit after taxes will remain same, definitely what will happen? The EPS will become diluted. Same thing, nothing is there. You have a concentrated milkshake and you put some water, it will become diluted milkshake.
Clear.
Understand, but nothing is there.
Yeah.
Understand with the best example. You don't want to read anything also.
Sure. On the exam, I will remember this example.
Yeah. See, my way of teaching is only examples. My way of teaching is I will make sure. See, if you go to the basic normal situation, then you will understand what is dilution. Diluted means what is that? You have to put some more water.
Yes. Clear.
Yes, tell me.
Clear.
Okay. Okay, that's all is there. Well, what are the things we have done here till now? Now remember, we have done something with respect to basic earning per share. We have done something with respect to diluted earning per share. We have done something with respect to convertible preference shares, the convertible bonds. We have done with respect to stock split. Okay?
Oh,
That's all. The things is this is the only thing. This is the complete chapter. This is the summary of the chapter. Fine?
fine.
Now coming back to this. Okay? Describe how now I'm just now you the moment you go step by step with numbers automatically you will understand what we have discussed. Describe how earning per share is calculated and calculate and interpret a company earning per share, both basic and diluted earning per share, for both simple and complex capital structure. When we say complex capital structure, nothing is there. We are talking in terms of preference shares, is it? We are talking in terms of preference shares. We are talking in terms of bonds. Either it will be convertible or it will be non-convertible. Every other information will be given clearly in the question. There will not be any confusion as such. Contrast between dilutive and anti-dilutive securities. Some we can dilute it, some we cannot dilute it. Is it right? And describe the implications. These are the two learning outcomes. Simple way of scoring marks. The most easiest way. The moment you say it's a difficult, I really surprised. Fine. Before you learn, it will be difficult. But now I am saying It's the most simplest way of earning the marks as such. What is the now? I don't want to make any more one. Earning per share is nothing but commonly used corporate profitability performance. That's why I told you in the beginning. Measures for publicly traded firms, non-publicly, or what are the publicly traded firms in Oman?
The ones on the stock exchange, right?
Yes, AOG. Okay. If you take UK, publicly traded companies will have PLC. Is it right? Any company with a SAOG is a publicly, as you said, the stocks listed in the stock exchange. The stock company, the company stocks which has been listed on the stock exchange, they will have the extension of what? They will have extension like this. If you take US, it will be PLC. Is that? In other countries, it will have PLC. See, what is the used for corporate profitable performance? Fine. For non-public companies are which one?
No need to report TPS.
Not listed on the stock exchange. Okay, not listed. Go in the simplest way. Not listed on the stock exchange. Non-profit companies. Okay, non-profit companies, closed companies. Okay, non-profit company. The EPS is reported only for shares of common stock. Only for equity. That's all. EPS is not applicable for all other things. It is for only for whom? It is only for equity shares only. A company may have a simple or complex structure. Don't get worried or panic about what is complex structure. Nothing is there. A simple structure is that one, no potential dilutive, means there is no, it is only, a simple structure means you have only equity shares, okay? You have only equity shares. There is no attachments are there, okay? Only equity shares will be there, no attachments. Whereas in a simple capital structure contains only common stock, non-convertible debt, non-convertible preference shares. Is it non-convertible? Means what is happened? See the thing. I will put it like this. If it is a simple structure, is it right? If it is a simple structure, you will have equity stock. Is it right? You have simple preference shares. No attachment. Okay, no convertible, non-convertible. The word will not be used. You will have a simple bonds. That's all. Means when they say it's a preference shares, the preference shares are only simple preference shares. Means in future there is no obligation on the part of the company as such. If that is the case, we call it as a simple capital structure. A complex capital structure contains potentially, is it potentially dilutive securities. You have the options. See, this is what the derivatives talks about. Okay, this is what the derivatives talks about. You have the option. In the option you have, they will say you convertible. Convertible means you have the option to convert or you have the option not to convert. Is it? You have the option with respect to conversion or not. Option means it is given option in either case. Is it? It may or it may not happen. You have some warrants will be there. They will give some certificates. Yes, in future you can convert after 10 years. You can convert this certificate into equity shares. Is it? In similar way, you have some convertible securities in terms of any type of investment, or more specifically in terms of what? In terms of bonds. Okay?
Clear.
What is the difference between a simple structure is you will have equity shares, you have the preference shares, you have the bonds. No attachments. Whereas in case of complex shares, there will be an attachment, there will be a condition. Okay, there will be a condition. All firms with complex capital structure must report both basic and diluted earning per share.
Clear.
Firms with simple capital structure only do with one, only do with the basic EPS.
Yes. This is clear, very clear.
Okay? And yeah,
Okay.
nothing is there, dear. Nothing is there. When I'm saying this, I'm saying I'm not misleading you. I'm recording this. It means you can say I am putting it on a public domain. Okay? Now
Sure.
we have done this. Okay? Now go by the word. Now what we have to do? I'm not going to start with the beginning. Okay? Now I will start with directly from profit after taxes.
Okay.
Okay, I don't want to waste time on that. Profit after taxes is how much? 10,000. Keep it in mind. We have to be very specific when we are making the things. Okay, you have how many equity shares? Equity shares are 50,000. 50,000 at the rate of $1. It will be how much? It will be amount will be $50,000. You will have 5% preference shares. Is that 5% preference shares? How much? You take 10,000 preference shares at the rate of $1. It will be how much? 10,000. You get it? Now.
So, what is like 5% preference shares?
Yeah. This 5% indicates the dividends.
Okay.
Whereas in the equity share there is nothing like percentage.
Yes.
Is it? In the equity share there is nothing like percentage. It's only a whatever the remaining. If it is profit, it is profit. If it is loss, it is loss. Is it right? Now.
Oh.
There are so many conditions attached to preference shares, but we are not going to go into that detail. When the situation needed, I will come back to it. Now, what happens? Profit after taxes. Okay, first you will pay what? You will pay preference dividends.
Yes. So it will be 10,000.
It will
minus 500. Minus 500.
10,000 times 5 by 100.
Yes.
It comes to how much? It comes to 500.
Yes. So the equation will be profit after tax, which is 10,000, minus the preferred dividends, which is 500, 9,500 divided by 60,000, right?
No. This is 500. Okay.
Yes.
We are paying it out. How much is left over?
9,500.
9. This belongs to what? This belongs to whom? This profits belongs to whom? This profit belongs to equity. At this point, we have to calculate EPS. Is it? At this point, we have to calculate after paying preference dividends, whatever the profits is there, this is the residual profits. These residual profits, what way we have said, earning per share is the earning per share. See that the basic earning per share calculation does not consider effects of dilute. What is the net income is there? Net income is how much? 10,000.
10,000.
Is it right? How much is the preference dividends? 500.
Yes.
Okay. What is the? Don't take weighted average. Okay. Weighted average is nothing. Weighted average is the opening balance plus closing balance of equity shares. Opening balance at the beginning of the year. What is the closing balance at the end of the year divided by 2. Okay.
Okay.
That is only that. This is not that much. This is not a complication. I am here to explain you. Okay. Now what happens? How many are there? 10,000 minus 500. It comes to how much? 9,500. 9,500. How many shares are there with us?
50,000.
50,000. 50,000.
See, because it's a basic EPS, you don't calculate the preferred shares.
Yes. We only take, okay, we only take the equity shares. How much we'll get?
We'll get 100,000. 0.19.
0.19. Is it clear to you?
Clear.
Is it difficult?
No. If you are asked to calculate the diluted, you just add the 10,000 at the denominator, right?
Wait. I'm coming to that. Okay, I'm coming to that. Fine, I will come into that. Now, assume, okay, assume diluted. Okay, assume diluted. I will put one line here, okay? I will put one line here. Okay, see that. See, first our variables has to be very clear. How many equity shares are there? Equity shares are 50,000. Okay?
Yes.
Now, you say that preference shares convertible preference shares. See, you have to mention that how the conversion is taking place. What is the conversion? Convertible preference shares are how much? How much we have taken conversion? We have taken convertible is 10,000. Is it at 1:1? Okay, 1:1. Okay. Now, first profit after taxes is how much? Profit after taxes is 10,000. Okay. First you have to calculate basic. Is it basic earning per share? Is it basic earning per share? Basic earning per share will be how much? We have already calculated 0.19.
Yes.
Okay. Now, what is the diluted? When we say diluted, what is the equity shares are there? How many equity shares are there? Equity shares are 50,000. Okay. Next, convertible preference shares. These preference shares will get converted to whom? They will get converted to equity shares. How much? 10,000. 1:1. Okay. 1:1. Don't make any complication at this stage. Then what will be the number of shares? Number of shares will be how much?
60,000.
60,000. Now, diluted EPS.
Okay. Now I see where I did a mistake.
50,000 divided by Number of shares are how much? 60,000. It comes to how much?
1 second.
0.8,
83.
No, how much?
0.83.
0.83. Yes, 0.83. How much is the profits, my dear? Allah Kareem.
Profit is 10,000, right?
Ah.
Profits after
If I'm doing something wrong, you have to make correction.
tax.
Okay? You have to follow me precisely.
I thought it's my bad.
No, don't. See, immediately we can judge how we have, where we have
Yeah.
done wrong or well. Basic is how much? Basic is 0.19. Diluted is how much? Diluted is 0.167. All the time, most of the cases, I can say all the time, whenever we calculated diluted per share, the diluted per share will always be less.
Okay. Okay.
Okay?
Sure.
Okay?
Oh,
Always decreases.
Diluted.
This is a blanket rule. This is the common understanding.
Before moving to the next point,
Okay.
I just need to use the restroom real quick.
Huh?
I need to use the bathroom real quick.
Okay.
Okay. I'll be back in 5 minutes.
Are you clear about this? How we are doing?
Yes, very clear.
Is it? No. That's all. Nothing is there. Okay. Now slowly you understand. Concepts has to be very clear. The moment we move to the questions, we should not have. You should remember. Yes, we have done this. We have done this. Immediately it has. Without referring the pages. I will refer the pages when I am doing the questions also. But it should be there upfront in your mind. The current year preference dividends are subtracted. See what they made it very clear. Okay, there is no ambiguity, there is no confusion in what we are doing. Yeah, the current year preference shares are subtracted from net income because EPS refers to the per share earnings available to the common shareholders. Net income minus preference dividends is the income available to common shareholders. Common stock dividends are not subtracted from net income because they are part of the net income available to common share. This is where we have done. This is where we have done with respect to the basic earning per share. Is it? Now, what is, see, I told you, what is the weighted, is the shares during the year, weighted proportion of year that were outstanding. It's nothing but what is the opening balance of the equity number of shares. Sometimes the balance will differ, okay, opening balance and closing balance. Even it is not differing. See, at this level, see, at CFA level, they will give clearly. Is right? You have to, in sometimes you have to make an understanding. If it is given or it is not, if it is given, fine. If it is not given, we have to assume, okay? We assume that it is weighted average cost of capital. You should not think that where is opening, where is closing. That is immaterial for us, okay? Now,
Okay.
effect of stock dividends. Is it effect of stock dividends? Now, here we are going to understand how the number of shares will increase. Is it? See, opening balance is that opening balance will be how much? 550,000 equity shares. Is it at 50,000 equity shares? Closing balance, is it? We'll come to the closing balance at a later stage. Is it at now? What will happen? You take this as an example. You are talking in terms of stock dividends. Is that stock dividends? What is the stock dividends? Stock dividends is nothing but you are not paying dividends in cash. You are paying dividends in shares. Okay, you will issue bonus shares. Is it right? You will issue bonus shares. Is it? Now, what happens in the shares? The value will remain same, only the number of shares will increase. Now, they will say that 1 for 5. Okay, they'll just mention 1 for 5. It means what? 1 bonus share for 5 shares you are holding. If you have 5 shares, you are eligible for how many shares? 1 share. Now, yes. How many shares are there? N number of shares are 50,000. Okay. Now, bonus. Yes, tell me.
No.
Bonus shares
sorry.
will be how much? Bonus shares will be 50,000 divided by 5. How many bonus shares will come? 10,000. Is that how many bonus shares will come? 10,000. Now total number of shares after stock dividend. See, in the examination, don't write all these things. You have to be very fast, okay? Just for your explanation, I'm writing this. Is that number of shares, total number of shares. Previously, how many shares are there? 50,000. Bonus shares are how many? 10,000. Is it right? Total number of shares will be how much? 60,000. When this is applying, this applies when there is a stock dividend. Is that when there is a stock dividend? Now, if that is the case, what will happen? Again, is it? Again, the earning per share, we have to calculate what? We have to calculate revised earning per share. You call it a revised earning per share, you can call it a diluted earning per share, both are same. How much is the, what is the profits? Profits will be 10,000. Is it profit after tax? Number of shares are 60,000. It will become how much? 1 divided by 6. We should have taken another number. Okay, we should have taken another 1 minute. 1 minute. I will make some small change here. Okay, if I will make some small change. 1 for 4. Okay, 1 for 4. Okay, so that we should not have the same values. Okay, divided by 4, it comes to how much? It comes to
12,500.
12,500. Is it? It comes to 12,500. Automatically, what will happen? Is it right? For 50,000 and 12,500, 12,500, it is. Are you comfortable with MS Teams now?
Yes.
Yes, as a 62,500. Is it right? 62,500. How much will get?
0.16.
0.16. In the end, I will make a table. Okay, I will make a table, and I will explain you how the things will work with this. Okay. Now, are you clear about this? This is when happens. This is happens. You see, a stock dividend is the distribution of additional shares to each shareholder in an amount proportional to the current number of shares. If 10% stock dividend is paid, it means the holder of 100 shares will get how many shares?
10.
10. Is that the holder of 100 shares will get? They'll say 1 for 10, 10 for 100. It is nothing but 1 for 10. Okay, 1 for 10. Is it for, if you remove it, it means if you are having 100 shares, you will get 10 additional shares. Okay, what is the stock split? It is the division of each old. I told you what is the old value, RO1. Okay, the specific number of new post split. Is it? It comes to now what is the value of each share? 0.100. The holder of 100 shares will receive 200 shares. Is it? For 2 for after a 2 for 1 split. Is it? 2 for 1 split means 2 for 1 split means if you are having if you are it refers to old number of shares, the holder of 100 shares, is it, will have 200 shares of, means if you are having if you are having 100 shares, what will happen? The 100 shares will be split into 2. Okay, the 1 plus 1. Okay, means 100 plus 100, it will become how much?
200. Clear.
Okay, or see, we got little bit confusion here, or 150 shares after 3 4, means the moment you are changing the condition. Okay, changing the condition. If it is 3 for 2 means how much you will get? 2 by 3. Is it right? 2 by 3 means you will get if you have 1.5, as simple as that. Is that you will get 1.5, means the conditions is very clear. Yeah, the important thing to remember is that each shareholder proportional ownership in the company will remain unchanged. The control will same. If you are having previously you have 5% of shares, after stock split also 5% only will be there. You are getting proportional. Neither your number of shares are increasing. Okay, but actually the control will remain same. Okay, previously we are having 100 shares, now you are having 200 shares. Not only your shares are increasing, but overall company shares will also increases. Okay, so the ownership will be unchanged. Keep it in mind. This is the one they will ask. Is it? This is the one they will ask. Is it? The ownership will remain unchanged. I'm putting the star mark by either this event. Each shareholder has more shares, but the percentage of the shares will remain same. Is it? The stock split. Now, we will take an example of the stock split also. Okay? We take the example of stock. How many number of shares are there? Number of shares are 550,000. Okay? Now stock split. We will take stock split as, we'll go with a simple one. 2 to 1. Is that 2 to 1? Now 2 to 1. What will have? How many shares will be there new? Revised number of shares will be how much? Revised number of shares will be how much?
One second. Can you say it again?
See, you are going for a stock split. Okay, you are going for a stock. Initially, how many equity shares are there? 550,000. Is it right?
Yes.
We have started with 50,000. We continue 50,000 only. Now the stock split is 2 to 1. Means if you have 1 shares, you will get how many shares?
2.
Your shares will increase to how much? 2. Means if you are having 50,000 shares, what is the total number of shares? Revised yen after stock split. Is it right? Revised yen after stock split.
100,000, right?
Oh yes, after stock split. It will be how much? It will be 100,000. Is it right? Now, what is the revised EPS? Every time we have to calculate revised EPS. How much profit after taxes? Profit after taxes is 10,000. Revised number of shares is going to be 100,000. The earning per share will be how much?
0.2.
This is one earning per share, is it right? This is stock split earning per share. This is basic earning per share, and this is the diluted earning per share. Are you clear about this?
Clear.
Is that everywhere there is changing? Okay, everywhere there will be a change as such. For our purpose, stock dividend and stock split are two ways of doing the same thing. There's nothing is different, okay? For a 50% stock dividend and for a 3-for-2 stock split, both results in 3, okay? But new shares for every 2 shares held. Stock dividends and stock split are explained further in the equity investment topics. You have the investments also. It is there. Fine.
Yes.
You have the investment topic also. In the investment topic, you have more in detail that they have explained there. Okay. Now,
Yes. Yes.
is it what it says? Just related to the investment, it makes where is it? Johnson Company has 10,000 equity. Put this 10,000 as yen at the beginning of the year. Okay, at the beginning of the year. Is it yen 0? Is it yen 0? Yen 0 is number of shares at the beginning of the year. On April
Yes.
1st, they issued how many? 4,000 new shares. Is it? This has been issued 4,000 new shares. You write down here. It will be more easy. Is it? When at the beginning of the year. Is it right? Year 0. Is it? Year 0. January. Okay. January. We have assumed January. Okay. We assumed it as January. How many shares are there? 10,000 shares are there. Now, here this is where we have to be very cautious. Okay. This is to be very cautious. Now, when they have issued new shares. How many they have issued new shares? Date is very important. Okay. 4,000 shares. On July 1st, they have distributed what? They have distributed stock dividends. These are the new shares. Okay. These are the new shares. These are the old shares. This is the stock dividend. Distributed 10% stock dividend. If it is 10% stock dividend, how much is there? How many shares we have issued?
1,000.
Is it right? 10,000 times 10 by 100. There is a condition, is it right? Distribute 10% stock dividend. Fine. Is it right? 10% stock dividends. Okay. Next, we will see this. See, that shows the thing. On September, what they have said, they have a shares repurchase. Any idea about share repurchase?
Yes.
What is that?
So the company buy its own shares. Buy back from the.
When they will do this usually?
When they want to have more control in the company.
When you have more control in the company, exactly. Is that when you want, you have to concentrate. Okay. Dilute means you are adding more. Concentrate means you are contraction is there. Concentrate control, or when you have more cash, is it right? If cash is increasing, to reduce the cash balance. Is that to reduce the cash balance? What you will do? These are the options which is available. That to reduce the cash balance, what we will do? We will make a repurchase. How many repurchase is there? Repurchase is 3,000 shares. Calculate Johnson's weighted average number of shares outstanding.
Okay, I have a question.
Tell me.
So on January 1st, they issued 10,000 shares.
Okay.
On April 1st, they issued another 4,000 shares.
Yes.
On July, however, Johnson distributes a 10% stock dividend.
Yes.
Do I always calculate the 10% of the N0 or N0 plus N1? It's always N0, right?
No. See the things. These people are getting benefit for how many months?
For which people?
The first people,
For 12 months.
12 months. These people will get benefit for how many months?
For 9 months.
9 months. These people will get benefit for how many months?
6 months.
6 months. Is it right? Now, when we are taking stock purchase, what will happen? What will happen? These people will, this number of shares will decrease. Is it right? This number of will decrease. Okay. Now, it is stock dividends. Okay. It is
Okay.
stock dividends. Are you clear about this? The first you understand this one, okay? Johnson's has paid 10,000 shares outstanding at the beginning of the year. On April 1st, they issue 4,000 shares. They distribute 10% stock dividend. They distributes. Is it right? They distribute how much? They distributes 10% stock dividends. Is it right? Stock dividends. They are not issuing, they are distributing. Is it right? If they are not, see, I'm not striking it off. I'm putting here question mark. Okay?
Okay.
Okay. Once I have written, I will not strike it off. I will put question mark. So that we will analyze when you are doing. When there is a stock purchase. Okay. Shares outstanding are weighted by the proportion of the year. Is it? By the proportion of the year. The first one is for 12 months. The second is for how many months? 9 months. Of the shares were outstanding. Any shares that are outstanding before 10% stock dividend must be adjusted for it. Anything which has been issued before should be adjusted. Anything that happened after stock dividends need not be
Do not need to be
adjusted. Okay, need not to be adjusted. That is the reason I put question mark here. Okay, that need not to be adjusted. Fine. Now you ask me the question. If I am purchasing on 1st April, how can I claim for one full year? Can I do that?
No.
No. Okay, can I do that? I cannot do that. Now there is a repurchase. Repurchase is nothing but company is buying back the shares. When the company buy back the shares, what will happen? Definitely the number of shares will decrease. Is that the number of shares will decrease? Now what it says, see the thing. They have how many shares are there? See the thing. Think of the shares before stock dividends as old shares. How many old shares before stock dividends? Okay, before stock dividends. How much they have paid stock dividends? 10%. Okay, how much they paid stock dividends? 10%. What is the old shares? Old shares are which has been there on 1st of January, that is 10,000. Old shares are there that is done on 1st of April. How many shares are there on 1st of April? 4,000. Before stock dividend. Are you clear about this?
Yes.
And after the stock dividends as new shares. Means stock dividends, what will happen? Stock dividends will nothing but it will, if you have shares before they issue, then only you are eligible. Otherwise you are not eligible. Okay? Otherwise you are not eligible. This represents ownership of a smaller portion of the company. It will be how much? 10th to 11th of that to old pre-stocked shares. Okay, fine. Now you see the thing. I will explain it more clearly. How many how many shares are there? One by one I will do here. Okay. How many shares are there? Number of shares are how much?
10,000.
10,000. How many you are issuing? What is the? You are issuing stock dividends is how much? You are issuing a stock dividend of how much? Stock dividend of 10%. Is it?
Yes.
Stock dividend of 10%. By default. We have little bit we should, if there is no necessity, don't use calculator. Okay? How much is
Okay.
there? How much is
One
there?
point.
This is for
11,000.
11,000. This is for full 1 year. Okay,
Yes.
this is for full 1 year. Next, what is the second one? Second one says that we have something on 1st of April. Okay, how many shares are there? How many shares they have issued on 1st of April? 4.
4,000.
Okay, 4. How much they are issuing? Stock dividends. They are issuing stock dividends of how much? 10%. Okay, how much? 400. Isn't it? This is 4,400. But this is for how many months?
The stock dividend.
This is for how many months?
The 4,000 for 9 months.
This is for 9 months. Is it right? 9 by 12. Is it right? 9 months. 9 by 12. It comes to how much? 3,300. Are you clear about this?
Yes.
Now, when you are repurchasing, when, see the thing, this is most important. This type of question will be given. That is the reason. It is this type of questions will be given. You are repurchasing. The moment you will repurchase, is it right? Repurchase is nothing but the shares will decrease. How many shares you are repurchasing? 3,000. But what is the duration? Duration is very important. Is it? Duration is very important. Is it? Duration is how much? You are repurchasing on 1st of September, if I am right. Is it right? September,
Yes.
October, November, December. How many months are there? 4 months. You have to reduce it for 4 months only. 3,000 times 4 by 12. How much you have to reduce? 1,000. Is that how much you have to reduce? 1,000. Now, number of these three. Opening balance is how much? This is the opening balance. Closing balance will be how much? Closing balance will be 11,000 plus 3,300, 14,300 minus 1,000. It comes to how much? 13,300. This is what? This is the closing balance of what? Closing balance of number of shares. Is it okay?
Clear.
Now, what is the weighted number of shares? Weighted number of outstanding equity shares will be how much? Weighted number of outstanding equity shares is 10,000 plus 13,300 divided by 2. 23,300 divided by 2, it comes to how much?
33. 11, 750. I don't know. 1 second. 23, 300. 11,650.
Do it again. Okay? Just revise this again. The only thing that is more important is it is the time period.
Okay, clear.
Okay? Slowly you do, nothing is there. Okay? You should make it a point. See. Now what is the basic earning per share? See the things. What is the basic and same thing. See what they say? They say that company has a net income of 10,000. They have paid cash and paid 1,000 cash dividends to whom? Preference shareholders. And what is the and paid how much? Cash dividends to common shareholders. Is it? And paid 1,750 to cash dividends to common shareholders. Calculate the basic earning per share.
Okay.
Is it? What is the rule? Rule we have to remember this. They have given you 1,750. It is there?
No.
It is there? See, 1,750 is the cash dividends. I told you, see the thing. You will have profit after taxes. Is it right? After that, you will prepare what? You will pay preference dividends. Is it right? Profit
Yes.
after taxes is how much? Net income. Net income is how much? 10,000. Is it? You go with the logic. Always follow the steps. Preference dividends are how much? They paid a preference dividends of 1,000. What is the amount is left over? This is the net income. Profit after taxes after paying the preference dividends. Now this will be the basis. Is it? This will be the basis. You are paying dividends of 1,750. It will become how much? It will become 8,000. 7,250 will be the retained earnings. Whether you are paying, how much dividends you are paying, you are not paying, is not material. It is not important for us. Earning per share will be calculated on this amount only. We are not calculating. See, earning per share. See, earning per share is different, and dividend per share is different. Is it right? Earning per share is how much? See, make it very clear. Earning per share is how much? Earning per share is 10,000. 10,000 minus 1,000 divided by weighted average 30. How much? 13,300. Okay.
Clear. And dividend per share. You have dividend per share.
Okay.
Okay.
1 minute. See the things. Is it right? Weighted average is nothing but they have taken the closing balance. Is it right? They have taken the closing balance. They have not taken this one. Okay? They have not taken this one. Okay? I'm just striking it off. Okay? Usually when we say weighted means opening plus closing. But here what they have taken? They have taken the weighted average number of shares is nothing but closing balance. Keep it in mind, remember this. Okay, keep it in mind and remember this. Closing balance, weighted average is nothing but the weighted average in terms of proportion with respect to the months. Okay, weighted average is in terms of proportion with respect to the months as such. Now, dividend per share. Is it? Dividend per share. We will come to this dividend per share. Right now, keep it on hold. Okay, what it says, we go by this statement. The payment of cash dividends on common shares is not considered with respect to what? EPS. This is what we have done. Is it right? This is what we have done. We have considered it. We have not considered it. Is it right? We have not considered it.
Yes.
Things to know about weighted average shares. Is that they have given explanation here. Okay, the weighted system is days outstanding divided by number of days in a year, but on the exam the monthly approximation method will probably used. Okay, in the exam they will ask on the monthly basis. Shares issued enter into a computation from the date of issuance. We have taken 1 by 4 like this. Is it 1 by 4 means on 1st April, okay? 1st April, they say 1st September, repurchase, means date of effective date. Reacquired shares are excluded. We have removed what? We have removed the repurchase from the computation of the date of reacquisition. A stock split or stock dividend is applied to all shares outstanding prior to the split, dividends and to the beginning of the weighted average shares. A stock split or stock dividend adjustment is not applied to any shares issued or repurchased after the stock split. Means when they have issued the stock split, they have issued the stock dividends or stock split, they have issued on 1st of September. As simple as that. If you are holding the shares before that, you are eligible. If you are holding the shares after that date, there is no common sense in that they will you are eligible to get the stock split. Okay, this is where we are talking in terms of what? Keep it in, just make it a point. Okay, weighted average outstanding shares calculations. It is completely different with respect to a normal weighted average. Is it right? Weighted average is exclusively for this. You have to follow these steps. Okay, you have to follow this. These are the steps. Are you okay with this?
Yes, this is clear.
Fine. Now, I will give one small example. You will do?
I will do.
Okay. You tell me. I will write here. Is that I'm telling you? Is that? See, very simple. Is that 1 1 2? In the same way, I'm just in 1 1 2 2009. Okay. How many shares are there? 25,000 shares are there. 1 5 2009. Okay, 1 5 2009. They have issued how many shares? They have issued 9,000 shares. Okay, they have issued how many shares? 9,000 shares. And 1 8 2009. Okay, there is a stock dividend. Is it? There is a stock dividend. Okay, how much is the stock dividend?
Clear. And then share repurchase now?
One minute. Stock dividend will be how much? 20%. Okay. Next. On 1/10/2009, there is a share repurchase. How many share repurchase? Share repurchase will be 4,000. Just let me know.
Okay. How does the stock dividend work? It applies on all stocks or the stocks just before stock dividend?
Before, not
Okay.
after.
Okay.
Before, not after. Okay? Before, not after. You tell me, I will write here.
Okay. First of all, 25,000 times by 1.2.
No, shares outstanding. Okay? 2009. 25,000. Okay? 20. How much is the stock dividend?
1.2.
1.2. 1.2. Okay? 1.2
Times
into 12 by 12.
12.
It comes
Yes.
to how much?
30,000.
How much?
30,000.
30,000. Okay? Next.
Okay.
I will change the next. What is the shares issued? 1/5/2009. Okay? 1/5/2009. How much they have issued? Shares 9,000. Is it
Times by
right? 1.2 times
8/12, right?
how much? Times 8/12.
12.
How much?
9,000. 7,200.
7,200. Okay. Next, share repurchased. How much?
Shares repurchased is 4,000 times by 3/12.
It comes to how much?
1,000. Negative 1,000.
37, 36, 200.
Yes.
This is the weighted number of shares. Okay. Next, you have a net income. Do it now. Net income is 32,000. Preference dividends. Is it right? Preference
Yes.
dividends. Preference dividends is 6,000. Okay. Preference dividends is 6,000. Now, EPS.
It's 32,000
EPS.
minus.
Question mark. Is it EPS?
Yeah.
How much? 32,000
Minus
minus 6,000 divided by 36,200.
0.72.
Are you clear about this?
Clear.
You have to do as much as practice, okay? Then only it will be more clear for us.
Okay. Can we do one example assuming there is a stock split instead of a stock dividend?
Wait, it will come next. It will come.
Oh.
Okay? It will come. I think it will come. It will come. If it is not, I want to preference shares is there. Basic is there. 1 minute. We'll see. If it is not there, I will do now only. Stock options is there. Number of shares purchased with these funds. We will stick to that what they have given. Okay, Mohammed. We will not
Oh,
we will not go the things beyond that because we don't know whether it is there in the syllabus or not. Okay.
oh,
Okay, we will go with what they have given. Then if we'll come across those things in the examination questions, then we will focus on that. Okay, will not waste
oh,
time.
oh,
Okay, okay. Next,
oh,
diluted earning per share. We have done diluted. I told you, is it right? Before calculating diluted earning per share, it is necessary to understand the following term. What is the diluted? Diluted securities are the options. Okay, warrants, convertible debts, or convertible preferred stock. I mentioned you all the things in the previous case. Is it right? That would decrease EPS once you have said diluted. Now we'll make a comparison. Okay, we will make a comparison. Basic EPS, is that basic EPS how much we have calculated? 0.19. Yes,
yes,
is it basic EPS how much we have calculated? We have calculated 0.19. Diluted is how much? 0.167. Is it there?
yes,
Is it
yes,
right? Diluted is how much? We have calculated diluted. How much? 0.167. Okay. Next. What we have calculated, the third one, we are talking about stock dividends. Is it right?
yes,
We have talk about stock dividend. How much we have calculated stock dividends? Stock dividends is how much? Stock dividends is 0. How much? 0.16. Okay, we have calculated stock split also. Is it right? We have calculated stock split 0.10. Okay, here we have taken the concept differently. Okay, we have taken we cannot compare this with the previous things. Is it right? We can compare this. 1 minute. We can compare this. I will make another example for this. Is it that very quickly? Very quickly I will put it like this. How much is the profit we have taken? Profit net income is 10,000. Okay. Can it will work? No, it will not work. Don't get confused. It will not work. Okay, because all things are different. Okay, all things are different. Okay, we have calculated like this. Now, at least from this table, we can say that if we think about a dilution, is it right? If we are thinking in terms of diluted per share, is it right? If you think in terms of a dilution, what happening? The value of the share will decrease as number of shares will change. Okay, number of shares will change. That is the message we can understand from here. Okay, that is the message we can understand from here. Anti-dilute securities are there. What is there? This is the dilutive securities are if you are exercising the options, if you are exercising the things, automatically the number of shares will increase and the EPS will
increase.
decrease. If what is anti-diluted or stock option, warrants and convertibles, that would increase EPS. If exercised or converted to common stock. Is it? If exercised or converted to common, it will increase EPS. Is that? It will increase EPS. How it will increase in EPS? That's very important. The numerator of the EPS contains what? Net income available to common shareholders. Net income less preferred dividends. In the case of diluted EPS, if they are dilutive securities, the numerator must be adjusted as follows. Okay? Getting my point? See the thing. This is all it talks about. EPS. Is it an earning per share? Net income minus preference shares dividends. Is it dividends for preference shares divided by weighted number of shares.
Yes.
Now, very closely, if convertible preference shares is dilutive, means convertible preference shares means number of preference shares can be converted into equity shares. EPS, what will happen? EPS will fall if it is converted to the convertible preference dividends must be added to the earnings. Is it? See the things very clearly. What we have done in the previous case and what we are doing here. Okay? What we are doing here. See how much is there previously what we have done? 10,000 minus 1,000 divided by how many shares are there? How many shares are there? We are taking this into consideration. Okay? We are taking these values into consideration. Okay? If you ask me how we are got this, we are getting this 13,300. Focus here very slow, very specifically. Is it 13,300? What they are saying, if convertible preference shares is dilutive, meaning EPS will fall if it is converted to common stock. The convertible preference shares the convertible preference dividends must be added to earnings to the available common shareholders. What will happen? It will, if it is anti-dilutive, we have to add back the dividends which we are going to pay to the preference shareholders back to the net income. If convertible bonds are dilutive, then the bonds after tax interest expense. Little bit complicated. Understand what? Little bit complicated. Now, till now, I started with what? I started with the profit after taxes. Now, I will start with profit before interest and tax. If it is convertible bonds.
Okay.
Convertible bonds. Focus here. Convertible bonds are dilutive, means convertible bonds. We are converting the bonds into equity shares. When we convert the bonds into equity shares, what is the thing? It says that after tax interest expenses is not considered as a interest expense. Is it? The interest expense multiplied by 1 minus tax must be added back to the numerator. Means whatever, see, profit before tax minus interest, profit before tax, whatever the interest we have deducted, this interest will be added back. Definitely, why you are adding back? The bondholders, is it right? The bondholders are converted to equity shares. Is it right? When they have converted to equity shares, they will forego, they will sacrifice their privilege of getting interest, and they will be part of the equity. In this process, they will save the interest expenses. They are not going to pay interest to the bondholders. Instead of paying interest to the bondholders, they will pay what? They will pay dividends. They will pay dividends. This is very critical point in the complete. You can talk about in the financial accounting, investments, management, everywhere it will come. That is the reason profit before interest tax minus interest profit before. Now when we don't pay, when they have converted, are you going to pay interest again to them?
No.
We are going to save interest. Is it right? We are going to save interest. But what will happen? The tax component will increase. Again, when we are not paying interest, definitely you have to add back the interest to the profits. When you add back to the interest of profits, instead of paying interest, what you will pay? We pay dividends. We pay dividends. Fine. Just give me a point. I will just explain you with the example. Interest paid on bonds is tax deductible for the firm. Again, I am saying profit before interest and tax minus interest. Is it right? Minus interest, profit before tax minus tax. It comes to profit after tax.
Yes.
If convertible bonds are converted to stock, I am very slow here, the firm saves the interest cost but loses the tax deduction. Yesterday I have shown you in one table 80-20 and 60-40. You remember that?
Yes. Yes.
1 minute. I will just go with that one again, okay? With that one again, so that, is it right? That is the reason that table makes lot of difference, okay? That it gives you a lot of understanding. Where is that? Here. It is displayed on your screen?
Yes.
See the things. If you have less debt, you pay more tax. Is it right? I have mentioned here, I have written here, debt is less, tax will be higher. Debt is high, tax will be less. Okay? I am going to come back to this table in every chapter. Understand? I will come back to this table in every chapter. I will make sure that it will make understanding about that. This is what it says. Is it right? This is what it says. The firm saves the interest cost, but what they will do? They will, if the debt is decreasing. Okay. See the things. If debt is decreasing, D for debt, what will happen? Tax will increase. If debt increases, tax will decrease. That is the reason, one of the reasons the companies borrow debt. The companies borrow debt to get the tax advantage. Write down somewhere in your notes. Is that? Now write down somewhere in your notes. Is that if convertible bonds are converted to stock, the firm saves the interest cost but loses what? Tax deduction. Thus only after tax savings are added back. Is it? After tax savings will be added back. Means we have to make sure how the conversion of debt into equity shares will have its implication on the EPS. Okay, this is we are doing now. Is that? This we will do now. The basic. Are you clear about this?
Kind of clear. It will be more clear once we do the example.
Yeah. You understand? You just keep how the things will. The basic EPS denominator. See the thing. When you are making the conversion is that when you are making the conversion, the numerator will also change, the denominator will also change. When you are making the conversion, what will happen? The number of shares will increase. Is it? That's all, as simple as that. The basic denominator is the weighted average cost of shares. When the firm has dilutive securities outstanding, the denominator is the basic adjusted equivalent number of common shares that will be created by the conversion. By the created of conversion of all dilutive securities. Is it? Dilutive securities. With respect to all the, with each one considering separately to determine if it is dilutive. Means you have to take one by one, as we have done in the previous case. In the previous case, what we have done? We have taken when opening balance separately into months, issue separately into number of proportion to months, repurchase into months. Here also conversion we also take separately, because separate conditions will be there. Is that separate? How many number of shares they have? See, if you are having 10,000 convertibles, okay, everyone will not go for that. Everyone, because it says very simply, it is an option. So that now we have to know. They say that 5,000 has opted, then we have to take 5,000 only. Is that means the calculations will become little bit more complex. Is that the calculation will become little. If the diluted security issued during the year, the increase in weighted number of shares for diluted EPS is based only on the portion of the year. Same rule what we followed previously, we follow the same rule here also. Is that we follow the same rule here also? Means we will take what? We will take only the portion of the year. See, as simple as that. If you are holding for one day, you are eligible for one day. If you are holding for that day, whatever the decisions of the firm, if you are holding the share, you will eligible. If you have sold the shares and after that it will be announcement, you are not eligible for that. Is it? This is where dilutive stock options or warrants, as I said, what will happen? It will increase the number of common shares. The moment you see, I told you, the moment there is a conversion, what will happen?
The moment there is conversion, number of shares will increase.
Number of shares will increases. Is that? Increase the number of shares outstanding in the denominator for the diluted. There is no adjustments in the numerator. Profits will not see. Have we ever changed the profits? Profits will never change. Is that? Profits will remain same. The same profits. Is it that? The same profits. The same profits will be allocated or distributed.
Same profits.
Is it right? To the revised number of weighted shares. Revised number of weighted shares. Is it clear to you?
Clear.
Is it? No. See the thing. The moment we will do this, we will have more clarity. What is the diluted earning per share? Okay. You are making adjustable income. When you say it is adjustable income, what you will do say things. What we are doing, adjustable income means we are adding. See that this is a very general formula. If you go to this, it is very specific formula. Nothing is difficult. Don't worry about that. We are not doing anything else. We are net income minus preference dividends already. How much is convertible? Proportion of, see what they say? They say proportion. how much is the convertible dividends, those convertible dividends will be added back. Is
Yes.
it? How much is the convertible interest, that much interest will be added back. Is it? Into 1 minus tax. See, this is separate. Is it? I will put like this to make it more clear. Is it? This is separate. This is 1, this is 2, and this is 3.
Clear.
This is 1, this is 2. Divide the things. It will make more interesting and it will make more easy. Now, what is there? You have weighted shares. Is that how many shares we have converted? Again, when doing the calculations, I will do it separately. Is it right? This is 4. Okay, this is working 4. Shares from conversion of preference shares. This is working 5. Shares of from the convertible debt if applied. This is 6. This is from the option 7. You will do, is that 1, 2, 3 is simple. 1, 2, 3 is very simple. You have to do working 3, working 2, working 3, working 4, working 5, working 6, and working 7. Simple. If you do it separately, automatically you will understand how it will work.
Okay.
Okay? The effect of conversion. Are you clear about this? Nothing is there. Don't worry. It is the 5. See, we have to follow the things as needed. Fine. The effect of conversion to common shareholders is included in the calculation of diluted EPS. Sorry.
That's fine.
For a given security. Fine. That's what they say. Okay. Okay. Is it clear for you? Now we will do a one question here before we wind up. Okay. We will do one question. What they have said. See, they are also making things easy for us. Is it? They gave you a example of preference stock. Okay. Then they gave you example of convertible debt. Is it? They gave example of preference stock. They gave example of convertible debt, and they gave example of a stock option separately. Is it? They gave you example of stock option. That's all. Okay. They gave example of stock option. Fine.
Fine.
Is it? Now, what they say, we'll do this before we wind up. Okay? We do this.
Okay.
During the year, how much is there? Reported income is how much? 4,004.350. This is the net income. 2 million shares of common stock outstanding for the entire year. ZZZ, see the thing, 7%, 5 million par. What is the par value? It is nothing but what is the book value. Okay. Preferred stock is convertible into a common stock at a conversion rate for what? 1 to 1.
Okay.
Is it? At the conversion rate is what? 1 to 1 for every 10 par value. For every 10 par value. They say that 2 million shares of common stock outstanding. They have not mentioned what is the shares of the, is it? Usually, is it? Usually they should mention it. Is it right? Net income of 2 million common stock outstanding for the entire year. 7% preference short at a conversion of how much? 1 to 1.1 shares. It is not 1 to 1, 1.1. Okay?
Okay.
1.1 for every 10 par value. Compute. Now what it says, this is net income. Is it right? Preference dividends is how much? Preference dividend they have calculated here.
Yes.
Is that preference dividends is how much? It comes to 4350 minus how much will come?
Minus 3.5 million, I think. 1 second. No, 350,000.
350. Divided by how many shares are there? 2 million. How much you will get?
2.
Okay. Calculate diluted. Fine. Now what you are doing? They are saying 1.1. Okay, 1.1 means if you are having 5 million shares, how many shares will be there? Divided by
550.
10. See the things. This is the amount. Okay, I am putting very clearly for you. This is the amount and this is the par value each share. Is it? You will get times 1:1. You will get how much? This is number of shares for whom? Preference shares. Is it right? Number of preference shares. Now they are not paying dividends. Understand point? When they
Yes.
converted the preference shares, they will save the preference dividends. They will save only preference dividends. If convertible shares are converted to stock, there will be no preferred dividends paid. This should be add back to the preferred dividends. See, this is very important. Okay. See, in the MCQ, we are not supposed to do, but it is better to have. How much is there? 4,350. First, they will deduct 350, then they will add 350. For your
Okay.
understanding, I am saying. Is that?
Yes.
You are understanding in the examination that's what it has to be clear, isn't it? The more complications, the more complex, the more clarity has to be there. You should not say that why we initially also we have 4,350, now we have 4,350. No, this is happened because of what? This is happens because of these things.
Yes. This is clear to me.
1 minute. I know, Alhamdulillah, you, okay? Fine. Now, but what happens? Previously you have equity shares, then you will have convertible preference shares into equity. This is where. Are you clear about this?
Yes.
Now you see the things, is it? Now what will happen? See, in the previous case, how much is there? Basic is how much? See, this is what we are learning. Basic is how much? $2. Whereas diluted will be how much? Diluted will be 1.7. Isn't it? What they are saying? Check to see if diluted EPS is less than basic EPS. If it is yes, the preferred stock dividends will be included in the diluted. They are saying that cross verification. A quick way to check preference is diluted is not is how much. See the thing. Diluted is less than preference shares. As simple as that. Is it right? 5 million point. See, fine, okay. We don't get confused on that. We will make this as a basis. Is it okay with you?
Yes.
Okay.